Welcome back to quantreef.com. Bitcoin's trading near 65,428, sitting right in that stretch between the recent swing high and a cluster of resistance overhead. Let's walk through liquidity, support and resistance, VWAP, Fibonacci, fair value gaps, positioning, and where this likely goes over the next several hours. Price is at 65,428, and momentum reads mixed to bearish underneath a choppy structure. Trend and structure score is soft on the 9-layer read. Price is holding above session VWAP at 64,680, and above both anchored VWAPs from the swing high and low, 63,919 and 63,739, so buyers are still in control of value even if the broader trend layer looks tired. No clean liquidation pool data is printing on either side right now, so I'll lean on the order flow and structure layers instead, which are actually two of the stronger scores on the card. That tells me resting size is more visible in the order book than in liquidation clusters at the moment. Price often gets pulled toward wherever that resting size sits before reversing, so watch the reaction at the resistance levels above rather than assuming a clean liquidation run. On screen, resistance sits at target 2, 66,446, then target 3 up at 67,590. Below, support shows at target 1, 64,839, then fib 0.5 at 63,893, with the stop loss marked down at 63,509. Given price sits closer to the support cluster than the upper resistance band, a test of target 1 looks like the first move, and a break of the stop loss level would invalidate the current constructive read. Above price, two unfilled daily fair value gaps sit stacked from 67,516 up to 70,687, and again near 71.4 to 73.4, both act as magnets on a strong push higher. Below, three bull gaps cluster between 63,140 and 63,979, with the lowest one already partially filled. Price sits inside the Fibonacci range, closest to the 1272 extension at 66,374. I'd expect the market to react to that fib extension before it reaches for the deeper fair value gaps above. The card grades this a watch, N printing 81, HTS at 51, decent readiness but not clean enough to call high timeframe strength. Order flow and volume and liquidity layers are the strongest at 78 and 77, while statistical volatility and institutional positioning drag it down at 25 and 32. On the 4-hour taker split, shorts dominate at 57.9% versus 42.1% longs, meaning short sellers have been more aggressive into this move. With shorts leaning heavier on the 4-hour taker split, a push into the 65,800 zone, the strongest resting liquidity wall above, could trigger a squeeze if buyers absorb that supply. Reach odds actually favor that side, with a 57% chance of testing it within 24 hours. If sellers defend it, the fade back toward target 1 at 64,839 and the fib gaps near 63,008 becomes the more likely path. Bullish case confirms above 65,805 with targets toward the 66 range, invalidated back below 63,509. Bearish case confirms on rejection at that wall, targeting 64,839 and 64,840, invalidated on a clean break and hold above 66,46. So we're sitting right at a decision point. Whichever side takes that liquidity wall near 65,800 probably sets the tone for the next several hours. If this kind of structure, probability and liquidity breakdown is useful, drop a like and subscribe, and check out quantreef.com, which runs this same 9-layer read across over 100 coins with a 7-day trial. Just remember, this is for educational purposes only and isn't financial advice.